Ever feel like you're stuck in a 30-year mortgage trap, just paying and paying with no end in sight? What if I told you there's a way to cut 23 years off that timeline without refinancing, without a bigger income, and without even leaving your house? Most people have no clue this strategy exists, but today I'm going to show you exactly how our clients paid off their mortgages in just 7 years. Let's dive in. So I don't think I've ever been this bold, but looking at the numbers, I can say this with a surety that amortization is the enemy. Let's go ahead and take an example right here of a loan of $250,000 at 4%, okay? So usually that's going to be equal out to $1,193 monthly payment. Now, you and I both know that $1,193 is not going towards the principal, not all of it. Some of it is going towards the interest. And I would say when you're dealing about mortgages and other loans, most of it is going to be going towards the interest, especially at first. So we have $833 going towards interest and then $360 going towards the principal. So my question to you is, are you okay with that? Are you okay with spending $1,193 of your hard-earned money and it getting divided up like this? All right. So if you were to continue on in the bank's plan for your life, $179,673 you're going to be paying in total interest if you're going to be staying in this for 30 years. That means your total payment, right, for a $250,000 house is going to be what? $429,673. My goodness, you might as well have gotten another house if that's going to be the case. And so we just want to start right now with this example that paying the bank's way is what is costing you the most, all right? It's not that they are unfair, it's just how things are, at least for right now. But there is a better way to pay this off, and you don't even have to have extra monthly payments, okay? We're gonna share with you how to take advantage of time over balance, all right? So we'll stick with this example, but we will show you a payment split trick. Now look, this is not going to be something that people talk about all the time, but there is a way, right? If you don't want to pay those extra payments, there is a way to take advantage of time and take advantage of that extra time versus those payments. And this is what I mean. You have that $1,193, right? That you're paying each month. What if you split those up into bi-weekly payments? And I'm not talking about letting the bank know that you want to be on the 15-year plan. No, because if you let them know, they're going to make sure they schedule it out so that they are still getting enough interest, okay? That's not what we want. We want the 30-year mortgage, but we're going to pay it our way, which means we're going to pay those bi-weekly payments of, all you have to do is split it up, $596.50, okay, every 2 weeks. So why do we want to do that? Because that's going to equal 26 payments a year. Well, wait a minute, CJ, 26 payments, that equals 13 full payments a year. It sure does. And you know what? Those 13 full payments is going to reduce your timeline. So instead of 30 years, you're now going to pay off that house in 25 and a half years instead of the 30 years. Why? All because you took advantage of time. That's how. All right. Now look at this. You paid it off 4.5 years early. But if you were to go by the bank's plan, you would continually pay until that 30 years was up. That means the first month, $833 is going towards them. The second month, maybe a little bit, like $830 will be going towards the bank instead of taking advantage of time. Now notice, we did not change the payment, guys. Look, $596.50 multiplied by 2 is what? $1,193. We didn't change the payment. What did we change? The frequency, okay? And we are not done. We're far from done. I want to share with you something else that you can do, because if you're not paying extra payments on this, right, and you're paying it off earlier, imagine what could happen if you did pay off with extra payments. We're going to see that next. Before we get into this next scenario, what would you do if your mortgage was paid off tomorrow? What's the first thing that you would do? Now, of course, our Money Max account holders, they already put this inside of the software and they already see their timeline. Some of them are 5 years, they're paying it off. And I'm talking about 30-year mortgages. And so if you have any questions about that, we definitely got your back. All right. So no, our next example is going to be how you can pay off each and every month. Let's just say $100 a month extra. What is that going to equal out to? That's going to equal $27,000 saved in interest, right? While you're going to be paying off in 25 years. That's actually the example we just had. Scenario B, if it's $200 each month, that's going to equal what? That's right. It's just math, folks. We're not doing anything hard. It's just math. $46,000, and you're going to be paying it off in 22 years. All right. And then, of course, if you pay with the $500 a month, it's going to be $93,000 and 17 years. We're going to go ahead and write that right below it. And then we're going to share with you what that looks like if we split the payments up, okay? It's gonna be amazing. So let me go ahead and write this last one down here for you. $500 each month. It's gonna equal $93,000 saved. And oh, by the way, you'll be paying that off in 17 years. Do you see this downward trend? We went from 25 to 22 to 17. Now, my question to you is this. If you're one of those that believes in the extra monthly payments, what would this look like if you divided this number up? Okay, these numbers, 100, 200, and 500. What if you had $50 every 2 weeks on top of your monthly payment or your bi-weekly payment of the $596.50? What would that look like? Well, you would pay it off even faster. Why? Because there's more payments going towards the principal. That is the trick, okay? Now let's go ahead and give you an example here of what we're talking about when we talk about bi-weekly payments. Remember, we are already believers in extra monthly payments, however much that is, okay? But let's take advantage of time so that we can pay it off even faster, all right? So we're going to go ahead and take that bi-weekly payment of $500, okay? This is on top, okay, of what you're paying bi-weekly. So the payment is going to be $1,096, okay, and 50 cents. That's every 2 weeks, all right? Every 2 weeks. What's that going to look like? Now remember, that's $500 extra every 2 weeks. So that's $1,000 a month. Remember, in our prior examples and prior videos, we would say $1,000 each and every month. But here, we're splitting it up. $500 this 2 weeks, and then $500 the next 2 weeks, so that $1,096.50 every 2 weeks. What's that going to look like? Well, it's going to look like this, all right? It's going to look like you're getting out in 13 years, and you're going to save $106,000 on that mortgage. But to me, that's not the most precious thing. That's not the most precious thing that could happen to you. Get out in 13 years. The most precious thing that could happen to you is to capture this $1,193 a month, that coming to you after the 13 years. Now, if you're wondering, man, how do I get it to 7 years? We just showed you the progression. Add on top of this, maybe you can do $700 extra. Maybe you can do $1,000 extra. And oh, by the way, there's also a line of credit that you can do as well. You want to see the line of credit example? For those of us who have knowledge of the HELOC, the home equity line of credit, people are paying off their homes, right? They're replacing their mortgages with lines of credit so that their house is essentially a bank. Okay, that information is in the description link as well. All right, let me show you just a quick example of what can happen if you use your line of credit to destroy that loan. Okay, let's say you're using $10,000 of your line of credit. Okay, let's say you use it not like everybody else uses it. Okay, let's say you use it wisely and you say, I'm going to deploy the whole $10,000 towards this principal balance. What's going to happen? Well, what's going to happen is that now you're going to be owing on the line of credit, but your principal is paid down $10,000, which now means that 4% is eating on the $240,000 instead of the $250,000. So in order to make sure that our line of credit is paid back as fast as possible, let's have our line of credit acting as our new checking account. What does that mean? Well, that means, let's say you have $1,000 in cash flow. If you have $1,000 in cash flow, we're just going to go ahead and put that down here. That means you're going to be paying off your line of credit in about 10 months. Okay? So this money is yours again after 10 months. What are you going to do with it? That's right. You're going to deploy it again because you're using your line of credit as your new checking account. When the income comes in, it goes into the line of credit, decreasing the balance, and then you're actually going to be paying the expenses from the line of credit. That $1,000 or $500 or $2,000 stays within that line of credit. That cash flow is what's paying that line of credit off so that you can again deploy it towards this gargantuan loan. Now remember, this is not a cash flow. It's not necessarily a cash flow sucking loan. This is a freedom zone loan. So if you wanted to use this method on another loan, feel free to. Of course, you got to check in with the lenders to see if you can, because guess what? They're going to want money. And if you're paying frequently, if you're a velocity banking individual and you are paying frequently like this every 2 weeks, they're going to see that they're losing money. So maybe some lenders will allow it, some lenders will not. You got to check with them. Make sure that you're paying frequently and you don't have to do extra payments. You can take advantage of that time and balance like we've always been discussing. So let me go ahead and move out of the way so that you can look at what your future can hold. You don't have to do the extra payments. Remember, you can take advantage of time. That's the biggest lesson that I want you to take advantage of, okay, is the time and balance aspect of all of these loans, because the banks are definitely taking advantage of that against you. Now, let's have that same principle work for you. So folks, if this got you excited in any way on loans and it's helping you out to pay off your loan or your mortgage or whatever it is in less time, go ahead and smash that like button, as well as if you're wanting to know whether you should refinance or not, let's go ahead and look at this video. Until then, God bless you and have a great night.